Hello everyone and welcome back. In today's video, we discuss everything to do with the stock, crypto and commodities markets right now, including the key levels that we need to be watching over the next 24 hours into the next few weeks. We're climbing the wall of worry at this point and we have gamma squeezes going on everywhere in the markets. Stay tuned, this will be a great one. See you soon. So welcome back to our daily market recap show here where we're recapping the markets closed 24th of March 2022. Obviously, if you like stocks, cryptos or commodities, smash that subscribe button. Of course, give us a like if you find value in today's video. We'll start off here by looking over the broad markets and then we'll get stuck into some commodities, some indices, some stocks, and obviously crypto. But overall, it was mostly green in the technology space and we had gamma squeezes coming through for a few stocks. Obviously, Aapl continued, Tesla continued to do well, and the big one was Nvda and AMD. Yeah, we'll have to talk about that very soon. Obviously, I had hoped something else had happened, but one thing I certainly wasn't doing was shorting against these stocks. Let's now talk about what happened on the broad day. So semiconductors did the best, led by, of course, Nvda. We had TAN coming back out, solar, and it was mostly a mixture of risk on and a little bit of sideways action on some of the main sectors if you weren't in them. Obviously, technology, materials, all of those continued to be some of the better returners. If we think about which market therefore did the best, it was the Nasdaq, but it was a bit shaky in the morning. It came down and tested twice the support of the previous day and then rallied incredibly hard in the first couple of hours. It then continued to rally throughout the end of the day and had a small sell-off at the end. Nothing really discernible here about the rally, though I will say that our bond indicator was basically going with the market. It was basically saying, yeah, we're still bullish at this stage. Now, that's not traditional bonds. It's a few other things mixed together into one. Let's now talk about denial phase and whether we have some form of bull trap going on here in a bigger disconnected market from the rest of the world. We all know inflation is here. We all know to a degree that the Fed probably cannot deal with it. Now, one of the best ways the Fed can deal with inflation is actually the Volcker kind of concept. And one of the things that they've been speculating on in terms of some of the memos that I've seen coming around has been that the Fed would actually like the market to be very low. Now, the market is going back up again, not ideal for them. They would prefer the market to come back. Remember, they don't see it as a systemic thing that's going to go through the economy. That's what, other people have said, not necessarily me. So are we in a big bull trap here leading through March into April, some form of return to normal? A lot of people are going to say yes. I'll be showing you on charts today that if the market was to go back up and then turn back around, that it really needs to find support here. In fact, if it didn't find support on the previous low, let's say we got there, bad things happen. We'll show you that on charts very, very soon. But let's just talk about this March-April run. A lot of people are starting to come around to this concept. It's going to be tough to time exactly. Obviously, price action and technical analysis should help us with that, along with our understanding of the key market indicators out there. But really, this kind of makes sense. A March into April rally still seems to be on the cards. Obviously, some of the stocks that we've been targeting in terms of just pure stats have been ones to do with splits. Why? Splits tend to do better in market conditions like this. Retail has not necessarily been doing that. Retail has just been going for everything to do with the gamma squeeze or any kind of short squeeze in general. That's been the best stocks in the last 2 weeks. Let's talk about where we are. This is a similarity between 2008 and 2022. I'm not saying that we're going into a 2008 scenario. We don't know that. We have no idea about those kind of situations. But in similarity years, and there are quite a lot of them, I could actually overlay a whole bunch, we tend to have a bit of a rally, and this is what they call that denial phase rally, where it rallies, it makes everybody think everything's all good. And the real key is actually going to be if you break through these supports. Look what happened previously in 2008 during that time. Very important to note that, because when we look through the last couple of pullbacks that have occurred in markets over the last, let's say 5-6 years, you'll notice most of the time they don't come back down. And if they do come back down, when they do, they bounce off that support. If they don't, oh, it's bad. And it becomes a massive capitulation very quickly. This is just a chart here for anyone that's new that hasn't seen it. Midterm election years tend to have a double dip. That is, they have a second dip later on in the year. We're suspecting it could be around earnings or the FOMC rate hike. which is going to come in, you would think, around May. So late April into May is just what the data is showing us. What other things have we got going on? Well, we have our canary indicator, that is the 2-year, 10-year. Hasn't inverted yet. It's just sitting around. It's actually come down a little bit in the last 24 hours. Okay. We'll keep looking at that. Obviously, that's something we watch on the charts. The VIX is down to 21.68. Now, a lot of people consider the 20 level as the level where the VIX turns from bull to bear or bear to bull. You'll notice it found a lot of resistance around this point before. If you want to read the VIX a little bit easier, possibly just switching it over to a line chart might simplify it for you. See how it just shows us the close? So much simpler to see the touches of that weekly around 20. Much, much cleaner. So if we get down to 20 for the VIX, what could we be suspecting? A possible bounce. There are going to be VIX buyers here, and if we hit the right levels on the S&P 500 as well, it could be that kind of dip pullback. Now, dip pullback in this overall bullish momentum that's coming through here into March into April, if we continue to see it, will just be more of a kind of trader's opportunity. But remember, 2022 is the year of the trader. What did the corporate bonds tell us? Well, the corporate bonds by themselves have basically stabilized to a degree. I mean, we've gone up, we've come down, and we've stabilized after the last session. This by itself won't help us too much, but you can see that inflation obviously is hurting bonds. Of course, that makes complete sense. And then the question is inflation hurting bonds more than it should be? Because that also shows you a bit of a weakness in the market, and you have to find out a way of really working that out on your charts. Let's move over to gold and to oil quickly here. So gold had its breakout. We've been a little bit more bullish on this over the last couple of sessions. Obviously, this breakout here was pretty significant. We got that. We breached through the 1950. Very nice. And now it's moving on up. Now, where do we expect it to go to? Well, a lot of people are going to say there's resistance around that 1975 area. I totally agree. That's previous support, previous resistance over here. So you'll want to probably put that chart down. And if you're a gold trader, you'll need to watch it. That's certainly a key level that we had on our charts. Now, 1960 was previous time. That was the one we used before. But 1970 has emerged as the new level, 1974 on this price. If it keeps going past that point, you would probably expect it to continue rallying somewhere around a 61.8, which is here, the 2000, to the 78.6. So remember, if we believe that this was a parabolic run that then crashed, one of the best return areas becomes that 50 fib to the 78.6. And when we move over to something like oil, it'll make even more sense to you. So let's move over now to the oil charts. And that's exactly what we've done so far in oil. We've gotten to the 61.8 fib, the previous resistance support, and in this zone so far, we're rejecting it. We've gone down to the 20 moving average on the 4 hour. It's bounced off that before. It's starting to look a little shaky. For oil traders, they need it to bounce right now, but it's in that danger zone. Anywhere in this area here is the danger zone for it to actually tip back over. Now, you may disagree with me. Totally fine. This is just something that I find is fairly replicatable after a parabolic run. And of course, the double bottom was an excellent kind of position, and somewhere in here to be targeting is an excellent position as well. So the best case I could see here, just from a statistical standpoint, is somewhere around that level there. And you need to be watching very carefully over the next 24 hours how oil trades. Remember, there are big announcements coming for oil as well, which I think could be a big risk to traders, and you need to be aware of them and have them on your economic calendars. So make sure you're fully on top of the oil trade if you are in it. Let's move over to Tesla. Another fairly strong day here. Closed above 1,000. That's actually the first time it's done so. It will probably create even more momentum. Probably the lowest day, well, it's not even probably, it was the lowest day on the options in terms of the volume that we saw going through on the market. It's been a huge rally here. Gamma squeeze, short squeeze, whatever we want to call it. Basically, it's on fire. And this is because retail traders are loading up, and we'll show you in just a second how they're loading up. But this is a dangerous trade if you don't have risk management. Remember, the problem with these types of positions is that, are we above 1,000? Yes. In historical terms, would that be very bullish for the stock? You would think yes, because it's closed above 1,000. The rally could continue on. 1,100 becomes the next level, or even 1,200. These are the key zones. And of course, 1,050. So every $50 chunk is going to be pretty big. You can see how this stock trades the $50 chunks. Why? because it's traded so heavily by retail. Let's have a look at the option strikes. So they've continued to open up here. We've got 1,000 open interest, 14,000. But look at this. This is where the gamma comes in. 16,000 opened at 1,050. And then we have a smattering all the way through all the strikes, thousands and thousands. This is not usual. This is a huge amount of short-dated options expiring into the market close here. And it just becomes really crazy when you think about 17,000 and 1,100. You keep going through 13,400, 1,200. People are buying it. And then we have 12,500. I mean, it's crazy here when you think about 1,250. Every one of these levels, there's just calls all over. And this is what's happening in the market. Yesterday, I reported on Nvda. And I was hoping that we could get back down to this price. Of course, I love this price. Why? Its previous resistance, a 20 and a 50 exponential moving average, and a 245. Now, if it had happened, would it have been a strong buy level? I believe so. Yeah, retail was having none of that in terms of options, and they pushed hard. I guess the one teller is if you weren't in, and well, firstly, you shouldn't have been shorting it. Never short. I told many people right now, it's tough to short right now because of the irrationality of the markets and what we're seeing happening. But yeah, if you're waiting, okay, you might have missed it. You can move on and go to another opportunity. In terms of what occurred, it was a rally that was very, very significant because it was formed by huge amounts of options. Obviously, you look here, 11,000, certainly a large amount, 17,887. These are the open interest, 15,000, 12,000, 11,000. I mean, it's just getting absolutely ramped by short-dated options here. Again, pretty amazing what's been happening here into the closes. Is it a risky position? Absolutely. And I just want to quickly make sure that everybody understands that this is the type of thing that if you get into it, I call it like the gambler trade. And why I say that is because it's probably an all or nothing trade. If you get into it and it works, great. If you get into it and doesn't work, you've got to control your risk. Why? Because if it doesn't work, it probably will take all of your money, as in you will lose it all, especially on short-dated options that are going to be costing a lot. So if you can spot them before they occur, there are some ways, though it's very difficult to do so, then great. But once they're in there, usually they don't last very long. And I think that if you want to, you should understand, read about it. And of course, most of you will know from 2021 how this began. The reason why I also brought this up is I think that if you go over to things like StockTwits, you go over to other websites out there that show like Wall Street Bets or whatever, wherever they're talking a lot about these positions, is when this happens, you really want to be looking for the ones that are on the uptrend, as in they're becoming more socially discussed. There are ways of doing that, Swaggy, Stocks, all of these other websites. And of course, they show you how much interest in terms of social media there is. It's important because if everyone gets on the social trade and they all start loading their little $500 and $1,000, it creates that effect. So I think you want to be aware of these things, but you also want to be aware of the risks. And I wanted to bring that up because the risks are there. The reason I brought up the bull trap potential here and climbing the wall of worry is there are many big problems in the economy. I think most people would agree with that. And it is most likely going to have a double dip. In fact, data would suggest we double dip in 2022 at some point. The harder it becomes to believe in that double dip, often the more likely it is to occur. The other thing that we're talking about here is what have we just seen accelerate in a week and a half? People went from being incredibly bearish on the market to incredibly bullish on the market. We just went and we basically have started a 2021 style squeeze effect, gamma, everywhere. Just like what happened in 2021 during that Jan into Feb period. How did that end? Poorly. Will it end poorly again? Yes. Why? Because they're always short style. They don't tend to last more than a matter of days into 2 to 3 weeks. That's how these types of things end up occurring. So I think you've also got to understand that it is not a good sign when these types of things appear. You might think it's great, and if you're in it, congratulations. But remember, it's the type of euphoria, the type of thing that you don't want to see because it actually degrades the integrity of the market, and you end up getting this big kind of potential here for a pullback in maybe even only a month's time, maybe even a couple of weeks or days, a big one too. So let's talk about Google. Google here is bouncing. Let's just quickly bring up the range that we were hoping for. Now, if everything does come to pass and we end up having a bit of a run here in the markets, obviously Google to around just that $3,000 is where people are looking for it. This was the one we bought in on the weekend. If you had grabbed it on the, I would say, on the move up here, because you could have got that right around where it moves through, you'd be up about 2.65%. So not really that much better than the market, pretty in line at this stage. But of course, a quality stock going into a split. These are just some of the technical things that you look at though. Is Google still potential value here in the markets? Well, it's on its way. People are starting to get more interested in it, etc., etc. So certainly something that's occurring at this point. Arkk is another one that we've been watching here. It closed above, obviously, its 20 moving average. When it did so, it also broke through the downward trend. It's the first good sign we've seen in the markets here. And if we continue to see this rally where we climb the wall, and remember, the wall, when we look at the S&P 500, can be very different to what you think. It's actually now got a little bullish hammer on it after last day, and of course it has the shooting star. So really, if you took a 2-day chart here, what is that? It's like a long leg doji indecision. It still looks more bullish than bearish. The market will have to, of course, dictate going up, and 76 would be a big level in terms of technical resistance here, around 76, 77. So another interesting chart. Aapl is getting the squeeze on as well. Aapl continues to strengthen here. It broke through that downward trend line on the weekly. It basically has just gone bull, 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 bull since. It's almost completely irrational in terms of how it moves. These are markets within markets at this stage. And if you're thinking of resistance, you're talking about that 176 kind of area. That being said, hard to fight this. If pullbacks do occur in the market, that's the type of thing you're looking at, that 166, where the 20 moving average and the 50 moving average will act as dynamic, and you'll have that previous resistance, previous kind of support structure coming through. So certainly a good zone if we were to see some form of pullback. XLY, consumer discretionary, as I always say, this kind of shows the risk on trade. Think of that as like a little long leg doji again. Looks kind of like Arkk. We've got the resistance, we've got the support, we've got the open close at the same level. We breach through. Where do we tend to go? Towards 190. What will that bring us to on their SPY? You would think around 4,600. We breach below. We then start talking about, okay, where do the buyers probably come back in here in the market? DAX, one of our lead indicators to showing us the real market in terms of the rest of the world, whether it's healthy or not, currently in a channel. So we've held the base here on the DAX. We'll continue to watch this chart. I think it's going to show us a lot about what might be in store for the US market as well, as will IWM. The small caps here broke a little bit lower, didn't quite come down to this zone. They could still do so, and we haven't obviously broken above. We're not trading IWM. We're not looking at it from that perspective. It's just a health warning in the markets. US 100, very strong. Another new high here. So it closed on the new high. You can see the futures are coming down slightly. It's bounced off that 14.4. We have an area down here around that 14,000, 14.2 that could be quite strong. Should it then come back down at some point, we might see a bounce. And really what you are looking for here, ideally, if we want this run to go through to April, is you do want it down and then you want it back up, and then something like the denial phase if it is going to come through. So that's the type of thing you're looking for in the market here. Where would it make sense to potentially get to? Around that point. So a lot of people think when you look at those charts and they say, okay, we go down, we only move about this far and then we sell off. I've seen denial phase like this, where it's gone and made a new high and then come down. So it can be very, very different to what you expect, but levels like this would make a lot of sense. Previous resistance, support. If it can get there, that's going to be a level that I think some sellers will start to come in. The key we watch here is not so much what the stock market is necessarily only doing. We need to look at all of the reasons and the inputs. Are some inputs effectively decoupling themselves with the stock market move? That's going to be important. Hopefully, we can talk about it here on the channel. So make sure to subscribe, as we will be covering this in a lot of detail over the next month, as this is going to be a fairly wild ride in 2022. Let's talk about the S&P 500, 4520. So almost a new peak here, 4600, obviously a huge resistance level for it. If you put a horizontal, there it is. Support, resistance, resistance, big key level here. We have a big support at 4,400 as well, and we're kind of in the middle of nowhere land. So it's more of a day trader scalper market at the moment. If you were set over here, great, it still looks long. If you haven't been set yet, then you're looking at specific stocks to set in. And if it comes back here, you're going to have a 20 moving average and a 50 moving average from the perspective of support, and from the perspective of resistance, we're looking at that 46. So pretty important stuff. What I did want to do is go back in time and just show you some of the times that it's pulled back up. So here's the market back in 2020 in August, and we saw the market drop off. It then went up. Now, some people would have said, and rightfully so, it could be the stage of denial, because obviously we're coming off that crash. If you didn't know what was going on, it came to support up here, and then it came back down. Now, what happened? We ended up finding a double support and moving forward. If this had gone underneath this price, and if I remember rightly back when what happened here was, it was absolute manipulation. The Fed came out and supported the support. I can't remember exactly what they did, but there was something, someone might have a better memory than me, but I think around this area here, a whole bunch of information came out to create the market back into a rally. They do watch TA. They watch key supports. They know the algorithms get involved and they smash it. So a lot of the time, this is what occurs. Over here, before, of course, the pandemic, we ended up getting a new high. Oh, nothing's bad. Nothing's to worry about here. But let's look at some of the other pullbacks. So obviously a pullback here, we never came back down to the support. Over here, we rallied, we sold off, we rallied. If it had broken past there, probably would have continued to go bullish. That's most likely technical thing. And then we broke that support. Then it went into capitulation, massive short off. Over here, we sold off, nice rally, everything's all good, sell off. If it had closed below, very bad. Okay, that's very bad. That's not what you want to see. It's the close below that will cause the capitulation. Over here, we have a rally, sell off, held, rally, sell off. And this was one that was very dodge, because if you look at it on a weekly, it's slightly different. But basically, we just kind of barely bulled up through it. And if you go onto a weekly here, and we bring it up, let's have a look at the 16, you'll notice what I mean. In 16, what happened was we actually got lower, but each close, so remember, there was no close underneath. Very sneaky. If that had closed below, ooh, would have been bad. Really, really bad. So yeah, this is the type of thing that you've got to be worried about in 2022. If it makes a new low and closes below, it can go into utter capitulation. And that is what many bears are looking for. Obviously, we're trying to be both sides. We're trading, we're looking at the current market conditions, and the current market conditions, you would say we're trapped within two big key zones. We've got our key support, our key resistance, we're in the middle, and day trading and scalping is the way to go. Obviously, if you're interested in that type of thing, you can jump into our Discord room, even jump into the public Discord room, the link in the description below. And there's plenty of people talking about the open, talking about the indices. And if you can get the indice direction correct for the day, guess what? You can usually find the good stocks as well that are breaking out. Let's have a look at the options. Yeah, there's still a lot of options here that are open, not anywhere near as much as some of the other positions. We do have a 350 in 450, I mean, for SPY here, and there's 34,000 now. So there's a lot of bull calls coming in short dated. Look, it would make sense to have finally a little bit of a dip into this options day. That being said, do I think it's statistically likely? I have no idea. We don't know. You'll have to look at the open and see how it ends up moving. We're at kind of that little bit of intraday resistance. We're back at those highs. You would think that they would try to close it under 450. In regards to the gamma squeeze stocks, I wouldn't try to predict those. It's going to be very, very tough. You might say, look, Tom, I did it. Haha. Well done. You get lobster lunch, lobster dinner, and everything else, all the coffees and brunches that you want on the weekend. But it's going to be quite tough. You want to put yourself in high statistical chance trades where you know your risks and you know what you're doing. If you try to short against these things, you can get brutalized. And I think you've got to be careful unless that's part of your system. Remember, a lot of people got brutalized for going against Tesla for years, and they did not do well. In fact, it almost bankrupted some of those funds. Let's talk about crypto. So crypto is more of the risk on. We've been reporting a little bit more positively on this over the last 3 days. That is because of this candle here. And of course, we now have a daily 2050 cross. Not that that means much, but certainly bullish. And we overall see that now as some dynamic support. Yes, the crypto market looks better. We are now going to deal with the 44, 45K BTC resistance. There will most likely be sellers here, but remember, this is basically like a 1, 2, 3, 4. You might say there's one over here. There has been a lot of touches of this zone. Eventually a resistance or a support will be broken. If we get through 45 into 46, it looks like Bitcoin has basically bottomed in accumulation. And if you look at this on a weekly, we've got some pretty strong resistance breaches that could be happening. If you get past these types of rejections, what are you doing? You're saying, haha, stop losses. All you shorters are going to lose. And guess what? A lot of BTC shorts have removed themselves from the markets. Look at this. It's going all the way back down. When they're there, when the whales are shorting Bitcoin, be scared. Right now, well, they haven't been the last 2 weeks. So it's really been consolidating and finding a lot more pressure. Ethereum was our pick. It's still moving up. Obviously, Ethereum here from a technical perspective is doing better. And yeah, it still seems to be moving up. If it comes back down, we will now have some forms of support here around that 3,000 mark. And obviously, we're looking towards that 3,400, hopefully, or even 3,600 on the charts. 2050 just about to cross. Thanks so much for watching. If you haven't already, please follow us over on FX Evolution on Twitter, and of course subscribe and smash that like button if you enjoyed today's video. It's a bit of a long one, but I did want to just go through the risks because they are becoming more real by the day, especially in the gamma stocks. Catch you for now.